Hello, ladies and gentlemen, and welcome to the show. Today is November the 29th, 2019, and it's a Friday. And TGIF, guys, and I hope you guys had a really nice Thanksgiving. Lots of food to eat and everything. That's nice. Anyway, let's get started. First thing I want to do is open up the charts right here, and we're going to take a look at India. India is slowing down really fast, their economy. They were at 6.9% expansion rate. Now they're at 4.5%. Now, that's a big drop really fast. The gross value-added growth to the manufacturing sector contracted by 1% in the second quarter of the fiscal, from 6.9% expansion a year ago. The government has taken several steps, including big cuts in corporate tax rate in September to boost investment and bolster economic growth. So they're worried. Things are slowing off really fast. But that's because the whole world's slowing down, not just India, not just China. It's everywhere. The whole world is slowing down, including the United States. Let's take a look at this ironical story. It's irony, is that the Fed has issued a paper. And in this paper that they've wrote, they've admitted that Fed policy can lead to economic ruin. And I'll just read a little excerpt of this paper that the Fed wrote. Down here, it says, now this is, I guess, part of the paper. It says, while governments never have to entirely pay off their debt levels, investors might perceive that as unsustainable. A solution to some countries with high levels of unsustainable debt have tried printing money. In this scenario, the government borrows money by issuing bonds and then orders a central bank to buy those bonds by creating money. History has taught us, however, that this type of policy leads to extremely high rates of inflation / hyperinflation, and often ends in economic ruin. But this is exactly what the Fed's been doing for the last 12, 10, 11 years. Dropping interest rates down to zero and doing money creation, And it says it leads to hyperinflation. Now, here's the thing about hyperinflation. There's a lead-in period that can last a very long time, where this acceleration phase, we'll call it, is the lead-in period. And you know what? We've been in it for a long time now already. And you know what? Think back maybe 11 years ago when you used to buy things. Well, think about what the prices were like 11 years ago. And now think of what the prices are like now. Everything except for televisions, has costs like 30-40% more. And that's your lead-in period, but that acceleration phase, what it does is it's kind of like a snowball effect, where the snowball grows bigger and bigger and bigger. That lead-in phase now is getting really going to kick into high gear, and you're going to see prices start to rise even faster. The final stage comes fairly quickly. Then it starts to move faster and faster and faster and faster, kind of like the snowball going down the hill. It just gets going faster and faster and faster, and that's the way with the hyperinflation. Let's get started. Let's take a look at these silver prices today. Not good. When you consider this inflationary environment we're going into right now, gold and silver are so undervalued. And they were way more expensive way back years ago, And here we have, looking at a silver price of $16.84, down 7 cents. Down 7 cents in this kind of hyperinflationary environment. Something's wrong, Take a look at gold. $14.54, down 70 cents. But they're following a range that they've been in, and they're not really dropping that much, within that certain range that they're in right now. That range for gold is between 1454 and 1460, somewhere right in there in the 1450s. So 1454 is near the bottom end of that range, but that you can see the range over the last 3 days, and it's a very narrow, tight trading range. Take a look at silver. You can see that tight, narrow trading range again that we're in. It's there's no wind in its sails right now. Now let's take a look at cryptocurrency. Cryptocurrency's been catching a little bit of breeze in its sails, and it's starting to move across the ocean now. 209.4 billion, and I'm going to refresh the page and just see if it's moving up. 210.3. It's moving up right now. It's moving up rather quickly in price. So we're looking at 66.7% Bitcoin dominance, and Bitcoin is shooting up toward $8,000 again. 77.61. It was down in the 6,000s, heading back up toward $8,000 again. And Ethereum 156, XRP 23 cents, Bitcoin Cash $224, and Litecoin at $48.69. Litecoin looks like a real value of $48.69 because it is still under $50 right now. You know what this reminds me of with cryptocurrencies? It reminds me of a while ago, like a year ago or whatever, when the price was down at 3,500 and it wasn't going to go any lower, and a few people were buying a lot. There was a lot of negative energy in the market, and Bitcoin was 3,500. That's what it reminds me of right now. It's got that same feel about it, except that it's at 7,700, twice the price. But that doesn't matter. Really, honestly, with cryptocurrencies, price doesn't matter. The sky's the limit to how high the stuff can go, especially if a lot of institutional investors and stuff start to pile on board, and it starts to rip upwards. The more it goes upwards, the more energy it gets behind it to go upwards even further. That's the way the stuff works. Dow Jones Industrial Average. Well, it looks like we're down 83 points. Let me refresh the page. 83 points down, 28,079. We got a little drop in the Dow today. I never seen a drop in the Dow before. We've been on such a bull market. It's like I have to blink twice. Is that really dropping in price? It's been ridiculous. What a bull we've seen. Anyway, we got a drop in prices. It's a novelty, a drop in price in the Dow. Let's take a look now at crude oil. It's down 89 cents, 1.53% today. Now let's take a look at U.S. Treasuries. And you know what we're looking at with Treasuries? We're looking at, it seems like it goes up one day, the yields go up one day, and then down the next day. I think what's happening is, I think the Fed's in there buying, and that's what's keeping yields down, And I think they're going to continue buying, and I just think they're going to take yields lower because they're going to continue buying and buying and buying. The Fed, they're monetizing everything. Let's take a look. Well, the system is broken right now. So markets, you can't trust any market to be actually real because the system's broken. 98.47 on the U.S. dollar index. The dollar's riding high and riding strong. It looks like it's went up about 25 basis points. 98.47. You got a strong dollar right now. Listen, thank you guys for listening to this show. You guys have a great day, and bye-bye for now.